Well, China's Foreign Minister Wang Yi saying just a few minutes ago that trade talks with the U.S. have made constructive and positive progress. Maybe, here are some signs. Sources say that China will import record volumes of U.S. oil and is likely to buy more U.S. soy. Now, these are the signals Beijing is sending to state-run refiners and grains purchasers. But all of this, as the president tweeted, this kind of a head-scratcher. He said our trade deal with China is moving along nicely, but in the end, we will probably have to use a different structure, and that this will be too hard to get done and to verify results after completion. Here to help me make sense of that one, in a Fox Business exclusive, is the president of the National Committee on U.S. China Relations, Steve Orlins. Steve, you tell me what this means to you, this tweet. It seems it's pretty cryptic.
Well, I think what he's saying is we're making progress on the bilateral trade deficit. So we're going to see some level of reduction. You mentioned soybeans, you mentioned energy exports. I think it's going to be LNG, less oil. I think we're going to see some reduction in tariffs, which are going to lead to increased manufacturing exports. But what that means over a 2-3 year period is probably 60, 70 billion of additional U.S. exports, which is great, but it doesn't deal with this enormous bilateral trade deficit.
Well, the trade deficit, this $200 billion number that the administration seems to be so stuck on, many analysts have come on our network and said that it's actually meaningless, that we're focusing on the wrong thing. Okay,
yes,
it's meaningless.
It is meaningless. To focus on bilateral trade deficit doesn't make any sense. No serious economist, though, there are those who do advocate it, thinks it's a way to measure progress in the trading relationship between the United States and China. We should really look at a ratio of current account surplus to GDP, where China actually has dropped 10 years ago from 9% to now 1.5%, which is a much more real measure. But what President Trump is referring to in the tweet, I think, is IPR protection, forced technology transfers, other issues that you can't solve by increasing U.S. exports.
Is that what he meant by verify completion, though? Is that, do you think, what he meant?
It's hard to know exactly what he meant, but I think that's what he's talking about. How do you know when the forced technology transfers have stopped? How do you know when IPR is sufficiently protected? I think he could establish metrics where you would see significant progress in China. But again, you have to establish those metrics, and they have to be sensible metrics for the U.S. worker, for the U.S. business community, for those who invest in China.
Well, I mean, you know, many have said, and I somewhat agree with them, that this really doesn't address this. So far, what we've seen out of these negotiations doesn't intellectual property theft. It doesn't address the issue of, I call it arranged marriages. If a U.S. company wants to do business in China, you have to share technology. Again, that's theft, in my opinion. So do you think that we're focusing still on the wrong things right now in these negotiations?
Well, yes, I think we're focusing on the wrong things. What we should be focusing on is reducing tariffs, reducing kind of non-tariff barriers. So there are all sorts of regulatory issues which obstruct U.S. exports to China. So something which we might call fake science. So they establish scientific regulations which aren't based on science. They're based on the fact that a Chinese producer produces to this specification and a U.S. producer doesn't. So things like that, when you can break down those kinds of barriers, you make great progress. But we've seen auto tariffs reduced, automotive parts tariffs reduced, which are going to increase U.S. exports. So we'll see tens of thousands of U.S. cars and SUVs exported to China, which is positive.
That's good news, because the auto sector obviously has been following this. But also, you know, I wanted to ask you, you've got such experience in China. And Wilbur Ross is somebody that has a lot of experience in China. But, you know, Stephen Mnuchin was over there, the Treasury Secretary. The Chinese were here last week. Doesn't seem like anything's really getting done. Do you think that Wilbur Ross is the person that could maybe kind of move this negotiation forward?
Well, I wouldn't say things are not getting done. Number one, I've been an opponent of the tariffs, and now the tariffs appear to be in suspension. So that's a good thing. We've seen the automotive tariffs reduced. We've seen open up of the financial services sector in China. We've seen progress in lifting equity caps in certain areas. So it's not that nothing is being done. So maybe, even though I don't agree with the threats, that we're not implementing them is having a positive effect on U.S. China trade relations.
All right, we've got some breaking news. I could talk about this with you all day. We've got to let you go. Steve, thank you so much for coming in.
Thanks for having me.
All right, Steve Orlins is with me here on set.